All right, folks, welcome to Investing for Beginners podcast. Today, we're going to do something special. Today, we're going to talk to our friend Kyle from Milk Road about some crypto stuff. This is not something we've talked a whole lot about, but Kyle is an expert and he's here to help educate us and you. So, Kyle, thank you very much for joining us today. We really appreciate you taking time out of your day to come help educate us about this very interesting topic.
Yeah, thanks. I'm happy to be here. Happy to explore the conversation of crypto. There's a lot happening, so I think it's an important one. But just happy to be here. Thanks, guys.
You're welcome. All right, let's start off with an easy one. Let's talk a little bit about crypto, maybe not go into the tech, but maybe talk a little bit about what it is and what you're seeing out there.
Yeah, sure. So I think the term crypto might be a little bit confusing to people. The technology is called a blockchain. Crypto is like a token that exists on the blockchain. I guess the simplest way to explain what blockchain is for those that don't even know what that is most of the world works in a database. Okay, so if you think of anything online, a bank, Facebook, they all have a database that they host at their own facility, wherever that is in the US or in whatever country you're in. And all the data, everything you do, your likes, your tweets, your money, they all exist in that one database that they control. What a blockchain is just a series of a bunch of different databases that nobody owns and nobody controls, but anyone can plug into. And so what that means is any of the data in there, any of the money that exists in there, the value, the person that's using it gets to own it. Okay, so Facebook owns my data, my value. The bank owns my money. It says I own the money, but actually the bank owns it. They can shut it down and block it any time. What a blockchain is just a bunch of these databases that are all around the world that everyone who uses it, interacts it, can own and custody the things that are in it. So that's the easiest way to kind of understand what a bank is. Now, why is that valuable? Why is that like a useful thing for us to put value on top of, whether it be a crypto asset or a dollar or a stock eventually is going to go on a blockchain? There's going to be a bunch of things that are already going on blockchains today. Why does that matter? And I think the real reason for it is when, a bank, for example, custodies your money and they own your money and it's in their server, it's very costly and very timely to move value across the world. So for example, I live in Canada. I'm going to Europe tomorrow. And if I was to send money to Europe, it's going to take probably 3 days and it's going to cost, I don't know, $30 at least for me to send that money there if it's like 10,000 bucks. I can today put a suitcase full of $10,000 in cash and I can get to Europe faster with that money than if I was to send it over the internet. Now in 2025, that makes zero sense. It makes no sense at all. And so if you think about what did the internet do for information and for communication and for messages, we used to have to send mail from one house to the next. It took, weeks to get there. What the internet did was say, hey, let's just make it instant and free. And now I can send mail for free over Gmail and it's instant immediately, right? And I can do it anywhere in the world. Blockchains are doing that for value, right? And so for dollars, for currencies, for crypto, like Bitcoin or Ethereum, for stocks, for anything you can think of that has value, if it's on a blockchain, I can move it anywhere in the world for free or basically for free. There's a small little fee, but it's getting cheaper and cheaper as the technology gets better and it's instant. I can do it right away. And so think of all the things, and if you're not really in the tech space or in the finance space, you might not realize all the different inefficiencies in the financial system. But the more you start to pay attention to the things that you do in your financial life, you realize there's a lot of fees for everything I do. And it's very, very slow. And especially if you run a business, you realize how slow it is. Blockchain basically fixes all that. And so the internet fixed information and made that move at the speed of light and very, very cheap. Blockchain fixes the value world, so the money world or the capital world, and makes it move at the speed of light for almost free. So that's kind of the big unlock that's happening here. Now, what comes from that? There's many, many things, and we can get into that here. But hopefully that gives, maybe you guys have questions of that, but hopefully that gives a good understanding of what this is.
Yeah, that's fascinating. So the whole bank idea, I'm in the US, so I've never had problems getting any money out of my bank in times of crisis. But that's not necessarily the case all around the world. So can you explain that value proposition for the world perspective, not just the US?
Yeah, being in the US, being in Canada, where I'm from, being in Europe, we tend to have pretty solid financial systems as long as you remain in your own country. Okay, so you have a good financial system, meaning we don't have a lot of banks that fail. Although in the U.S., I mean, you guys had 2 or 3 that failed. Was it in 2023?
True.
So it's not just the U.S. Or it's not just other countries. It is the U.S. as well. But you guys can send money very, very easily. You can pay for things very, very easily. You just tap a card. You can send money from one person to the next inside the US with Venmo very, very easily. But if I asked you to send me money, and I'm in Canada, I'm not far from you, to send me money, you couldn't do it. I don't have access to Venmo, right? So you could use it PayPal. But for me, it's quite expensive to use PayPal. PayPal really works the best in the US, right? But let's talk about someone in, I don't know, India or in Argentina. Can you send them money? Right now, you cannot, right? But the world is going a lot more global, right? So I don't know, I have a company, 2 companies of 45 people, and we have employees from 18 different countries. Some of them are in Argentina, some of them are in Europe, some of them are in India. And I actually can't pay those that are in Argentina. It's very difficult and hard for me to pay those that are in India. When we had a Russian employee as well, and when the sanctions came across, we couldn't pay them either. And so we need a financial system that allows us to work in a global world, right? Where there's people all over the world that are now working online. They can work for American, Canadian companies pretty easily, and we don't really have a good means of paying them. So that's one thing that, although if you're American, it is easy to work within the US, it is not so easy to go and do things outside of the US. So that's one part. The next part of this, of sort of like a global financial system and why this is so important, is there's a lot of places in the world, and in fact, more than 50% of the world actually doesn't even have access to a bank. So I can go to a bank and it's very easy. You guys can go to a bank and it's very easy. A lot of your listeners can too. But if you live in India, it's very hard to find banks. It's very hard to get financial services. It's very hard to get a loan. If you live in Africa, it's even harder, right? There's hundreds of millions of people over there, and yet they can't even put their currencies inside of an institution, right? They have to put it under their mattress and hope that they don't get robbed, right? And so it's a very different world. And then try to get that money outside of Africa, or outside of India, or outside of China and into other parts of the world, right? It's near impossible. And if you can, it's extremely expensive. There's a lot of people in America and in Canada that have families in South America, in India, in Europe even, and they pay remittances, right? They want to send money back to their families. Western Union and some of these other companies, they take up to 30%, sometimes higher, on fees, depending on what parts of the world you're going. And so imagine you work your butt off every day, you earn, I don't know, $2,000 or something. You want to send half that back, $1,000 before it gets to your grandma back in, whatever country. That $1,000 is only $700 or $500, right? And so there's just, again, these are the inefficiencies that don't really work in the world. Again, we're blessed if you're in Canada or sort of the Western countries. We don't really have that issue, but you don't have that in a lot of the world. And again, there's billions of people in India and in China and Africa, a lot more than there are in the US. And so there is this whole thing that's happening in the crypto space, which is we want to get financial services to the rest of the world, and we want to integrate the world to be able to move money easily. But it's very, very, very difficult. There's not a lot of need or want to open up a bank in, name your country in Africa or in India, right? And so there's just a lot of people that are underserviced. And so what crypto does is says, hey, you don't need to have this like physical facility or physical institution inside the country. Instead, you just download this one app, right? This one wallet on your phone, which they all have access to the internet. They don't have banking, but they do have the internet and they do have a phone. And so with one click, you can download a wallet like MetaMask or like, there's a host of different ones. And immediately, all of a sudden, you enter the global financial system. So anyone in India, anyone in China, anyone in Africa can download this app on their phone and boom, I can send them money today, right? And it can get to them immediately and for free. And so this is like, it's not a big aha moment for necessarily Americans, but for half of the population, it is like, whoa. Right? It's almost like, again, when I like to compare blockchains or crypto to the internet, we always had TVs in America and in Canada. And so we always knew what was going on in the news. We could watch the news anytime we wanted. Again, in these other countries I'm talking about, they never really had that. They didn't actually have access to TVs, or it was too expensive for a lot of them. And then all of a sudden, they all got phones because those were so much cheaper than a TV. And boom, they got Twitter or they got Facebook. And now they all of a sudden can see what's happening in the world, right? That's what's happening here with finance, which I think is really cool. And then one last thing I would say, the US has the dollar, which is the dominant currency in the world, is the global reserve currency. And sure, it's being inflated away a little bit here and there as well. but it's not so bad, at least compared to all the other currencies in the world. I would say all currencies around the world are pretty crap, right? At least compared to gold or stocks or Bitcoin, in my opinion. But the US is the best one. But then if you go to somewhere like Argentina, it's inflating at like 200% a year, which is just mind blowing. Turkey, same thing. All these countries around the world have just, you work your butt off every day to make money. And then a month later, it's worth like 30% less than it was. Like from Canada, I can't even imagine that. That is just insane to me, but that exists for billions of people in the world. And so again, what blockchain does is, sure, it allows this, some people might have heard of Bitcoin, which is this sort of scarce asset. There's only 21 million. It's sort of like the digital version of gold. So there's that. But also when I talked about a bunch of different assets and things are going to go on blockchains, dollars are now becoming the biggest thing that's moving on chain. And you have Scott Bessent in the US administration, which is saying stablecoins are actually one of the biggest things that we want to push in the US right now. And that's because what they're doing is they're putting dollars on a blockchain, and then they can spread those dollars out around the world without fees, right? And so now what's happening because of blockchain is anyone in the world can get access to a US dollar for free. And that is, as an American, it's like, well, whatever. To the rest of the world, that is one of the biggest things that's going to change our world, probably ever, or at least, one of the top things. Because again, money is so important to everyone. And if you're being inflated away by 30, 40, 50, 100%, and you can get rid of that by just holding onto a dollar now, it's such a big unlock. And so I don't know that a lot of people are realizing how big this is.
So can you kind of double down on the whole stablecoin idea? Maybe explain from a high level what it is and how the dollar becomes a thing on a blockchain. I'm curious about that.
Absolutely. So if you think about the way a bank works, I put a dollar in a bank and it puts it when it's safe or wherever it's vaulted. And, a lot of it is not even actual real cash anymore. It's just a digital piece of money, but it shows you that you have that dollar. Okay. And then it owns it. Now, the reason why I can't really do much with that if I want to go globally is that bank controls it, and then they're not integrated with every other bank in the world. So it's kind of, slow to move it around. It's costly. We kind of already touched on that. What blockchain does is it allows banks to still take a dollar and put it in the bank. But then what I can do is, instead of having it on my, Schwab account and show it there, a company can instead take that dollar that's in a bank and basically recreate it as a token on a blockchain. And so now it's on this global ledger that I talked about. Okay. Still in the bank, it is represented 1-to-1. Okay. It's kind of like when you buy a stock. I don't actually own the stock. Someone has it, they custody it for me, and then they put it in my, Schwab account or whatever account and show me that I have it. Same thing here. You're going to put a dollar in a bank, and then a company like Circle, that's the biggest one in the US. They're now a public company in the US. They basically mint, is what it's called, a token that represents that dollar. And it just tracks the same price of a dollar. It doesn't go up and down. It just remains the same price as a dollar would versus anything else. And so once you have it on there, now I can move that thing around to any wallet, any person. It doesn't really matter. The dollar is still here in that bank account. And at any point, whoever owns that USDC is the ticker or the title of that dollar, they can go and they can redeem it with Circle at that bank and get that dollar back. So it has the same value, right? It's the same thing. Instead of it being in my Schwab account, though, it is represented on a blockchain. And so you have Circle, which I think is maybe around $70 billion worth of stablecoins exist right now in Circle. There's another one called Tether. This one's outside of the US. And it is like 200 and something billion. It is one of the biggest, most profitable companies in the entire world right now, which is insanely wild. And then you have a bunch of other ones that are sort of smaller. And then you have ones that are like decentralized versions that there's actually not anything in a bank. Forget about those. There's a lot of experimentation there. What you need to realize today is the stablecoins that exist, at least in Circle side, the USDC, these are just one-to-ones. It's just represented on a blockchain rather than in a bank. And again, the reason for that is you can move it for free anytime, 24/7, globally with no fees, and it's instant, right? So it's just a wrapper of a dollar that can be expressed with more things. You can do more with it, and you can do it in more places, I guess is the best way to explain it.
So just to recap, and we're going to use the words bank liberally because I don't know legal definitions, but in your example, Circle is kind of like the bank, and you're giving them your dollar. You're giving Circle a dollar, and then Circle is giving you the coin. and then you can do with
Exactly.
the coin whatever you want. So
That's exactly it.
okay.
Yeah. It's almost like going to an arcade and you're buying like tokens, right? To go and play in your arcade. And you're like, here, I'll give you $10. You give me those tokens. If I wanted, I could go give you those tokens back and get my money back, or I can go and use them, right? It's basically that.
So without getting into the technology, because I'm sure it could be, be a big can of worms. What makes the dollar at Circle stable, safe? What enables that?
Yeah. Good question. What enables that is just the fact that it backs it 1-to-1 and you can see the assets that they hold. So you can see, so on banks, you actually can't see that. You give them, if I give my bank $100, tomorrow they're lending out 90% of that at least, right? Fractional banking is what we use in the Western world. So they're going to get rid of all that. In what Circle does though, is they take your dollars, they put it in a bank and they put it in treasuries, but on a short-term basis. So the meaning it's liquid, they can get it anytime. And so anytime you want to redeem it, you can get your dollar back. Now, obviously someone could scam and there could be frauds. That's happened before, but that happens in the traditional banking world as well, right? If you grew up in the 90s, I think Cyprus, they just decided they were going to take all the money that everyone had, and because their banking system was failing, right? We just saw it with Silicon Valley Bank and whatever the other one was. Now, thankfully, there's some insurance and stuff, but same idea of Circle is the same thing as a bank, except I would say it's even, I don't want to say it's more secure, but it doesn't lend out with as much risk as what the banking world does. All it does is put it in treasuries. It earns its 4.75% or whatever the Fed fund rates is today, and that's basically it.
I'm sorry, I don't mean to feel like I'm attacking here, but who decides at Circle that they're going to buy treasuries?
Who decides that? Yeah. So, again, think about it like a bank, right? Okay. Who decides the bank what they're going to do with your money, right? So it says you have $1,000 in your bank, but they're lending it out to whoever and whatever. They have professionals that this is what they do. This is their job. Circle, same thing. They've hired basically the same professionals from banks to do the same thing for them, but they have, I think, even more restrictions than a bank would in the US.
Nice. Are you a fan of Circle, and what makes you like Circle versus another option, or is there another option you like better than Circle?
Yeah, so I think Circle's a great company. They've been a steward in this industry for a long time. There's been a lot of fraud in crypto, which is why I think a lot of people are so nervous about this space. But Circle has been one of the companies since day one. They've been here since I think 2016 or 2017 that has never had an issue. They've always pushed this industry forward. They've always followed regulations. They are now a public company, so they are scrutinized more than most companies in the world. And so they're a very respectable and responsible company. And so I definitely am very trustworthy of them, just like you would be in any other bank in the US, because they have to follow all the same regulations. Now, there are other companies that don't necessarily have that because they're either outside of the US, or you also have companies. One thing that's interesting about blockchain is that it's the word is called programmable. So assets that exist on a blockchain, you can program things kind of like you can with like code for any piece of software. You can't do that for like a physical piece of paper, a dollar, but you can do that when that dollar is put on a blockchain. And so there are companies that, as I said, they put your dollars into a bank, they put it in treasuries, and they earn 4.75%. Circle right now takes all that, and that's their profit. There are other companies that what they do is they put it in a treasury, they make 4.75%, and then they give 3% to the consumer. And so you hold this USD, whatever, USDC or USDT in your wallet on chain, like on a blockchain, and it just because it's programmable, auto earns yield, right? Similar to like if you were to put your dollars in a bank, except banks don't give us interest anymore. You might be lucky to get like 1%. Well, you can in crypto, if you're lucky, exactly. In the blockchain world, they're trying to sort of reinvent this and sort of revolutionize this and bring yield back to consumers. And so there are other companies that do the same thing, but they actually give that yield back to you. And so I think that's an exciting new thing that's coming. A lot of people in the crypto world, we do this. We're like, why would I hold a dollar if I can hold a yield? They're called yield-bearing stablecoins. So those are the things that kind of excite me, but they're very much on the forefront. They're still experimenting. They're innovating over there. There's not a ton of... So we just had the stablecoin bill that came in the US, which was such a big unlock for this. And that's what's really bringing the trust into this space is it's now regulated, right? And so there's rules. The SEC knows what they need to do. The government knows what they need to do. The tax companies, et cetera. Like there's now structure, which we've never had before. So that just came earlier this year. We don't have that structure yet for the yield bearing stuff. So again, that's sort of the Wild West, I would say, of stablecoins and of crypto. But that's what you have to do. You have to innovate first. And then once it gets big enough, then the regulators come in and they go, okay, this thing's pretty cool. What should we do here? How can we regulate this and make sure that there's no fraud? And so that's where, as a crypto person, I live and I am excited about. But Circle is definitely the biggest in the US and I think going to make the biggest impact in this space for a while.
Yeah, that's fascinating. So I'm curious, you've kind of touched on some of the fraud and stuff. How can a normie, like me, who's not really into space, how can I identify what's legit and what isn't?
That is a very good question. So the thing to understand about crypto is these are just a bunch of private companies that are all startups, right? So it's hard to invest in a startup unless you're a credit investor, you're a VC, et cetera. And in crypto, because you can tokenize things, and as I said, it's permissionless. So it's this global database that anyone can interact with. Anyone can launch a token on there. What that means is anyone can launch equity, essentially. In the traditional world, I can only launch equity to the public if I go public, which means I have to file all this paperwork. I have to get approved through the SEC. It takes years and it costs millions of dollars to do. I could literally launch a token right now on this call in 5 seconds. Right now, it won't have any value, right? It's like me saying, hey, I'm launching this company. Does anyone want to buy it? Well, no, right? So it is a bit different. And so there is a lot more, let's call it crap companies that aren't as good. But that's true in the startup space too. If I was to go and be able to invest in the tech world, there's a lot of really bad tech companies out there. It's just I'm not actually able to buy them, which is probably a good thing, right? For a lot of investors out there. Crypto's different. As I said, you can go and you can create a wallet today and you can buy any token that exists. And so it is a space where there is a lot of value that's going to be created there because it literally is a new financial system, a new global financial system, kind of like a new internet. For the finance world. So it is an exciting space and a good place to invest in, but you have to remember that there isn't these loopholes you have to go through to launch that equity. And so 99% of tokens that exist have actually no value. There is nothing going on there. And so it is an education that you have to get. And that's really like study the space, listen to podcasts, read newsletters, look at the data. The interesting thing about blockchain is, again, because it's an open ledger, this open database, I can go and look and see the revenues of any company. I can see how many users every company has. I can see how much volume they're going through. I can't see that for Robinhood or for the banks out there have to wait for their earnings reports every quarter. In crypto and in blockchain, you can see that live anytime you want. So it is actually a better opportunity for investors who understand what's going on. But of course, it's very, very complicated. Just like if you were trying to invest in internet companies in the 90s, it's like, who should I invest in? You're like, I have no idea. There's so many of them. They're all launching equities, in 1999, et cetera. It was very difficult, but a few of them made it out. It's kind of the same situation and scenario here with crypto and with blockchain. So you just have to really be educated and really understand what you're doing.
Yeah.
But my advice, though, just to answer, my advice would be to use it, right? I think the best thing you can do is actually just to use the stuff. Because one, I'm explaining what all this stuff is and you kind of get it. But until you use it, until you've sent a transaction or to someone, in India and they receive it a second later, it's so hard to even understand what that is. Like sending an email, right? Like imagine in the 90s, you're like, yeah, we're going to have these things where you can send emails and you can chat. And you're like, what are you talking about? No way. And it's like, once you do it, you use it, or you take a loan out with your Bitcoin on like a DeFi protocol, it's like, whoa. This just happened automatically. I didn't have to go into a bank and sign all these forms, and it took a week to set up my account. It's a whole new experience. And so I would recommend people just go and try it, play around with it. And if you're in the US, I'd start with Coinbase. It is sort of the leader. It's also another public company, so you can trust them. They push you to use a lot of these things and kind of teach you along there. But I would start by using it for sure, just obviously with a small amount of money.
Yeah, kind of dip your toes, $100 here kind of thing.
Exactly.
Yeah.
Exactly.
That's fascinating. How does Ethereum and Bitcoin play in all of this? Because those seem to be the two that you always see on CNBC whenever they talk crypto.
Yeah, absolutely. So Bitcoin has really kind of crossed the chasm, I would say. Every, big time investor, sovereign wealth funds, even the US, they are buying or holding Bitcoin at this point, right? You have a lot of companies that are putting Bitcoin on their balance sheet. And the question is why? The main answer is it's basically gold, but it's digitized, right? So gold has obviously been a store of value for hundreds and hundreds of years. Why is it a store of value? It's hard to mine new ones, and so there's a finite, scarce amount of it, right? And so that is obviously very valuable in a world where currencies, the governments can print them or central banks can print them and create more of it. You can't create more gold. Well, at least it's very hard to. So Bitcoin is basically that, except for the fact that if you think of what are the problems of gold, well, it's heavy, right? It's very, very heavy. And so if I want to own, I don't know, $1 million of gold, I either have to, get someone else to custody that for me. So I'm back in the same issue. I'm now back in the banking system or the financial system. I have to trust someone with my gold, which again, in the US, probably not a problem, but there have been many places around the world where that has been an issue. But the other issue is let's say I want to move to another country. Well, how do I bring my gold with me, right? I got to it's very costly to move that gold to another place around the world, right? Whereas Bitcoin is, think of it as the same properties. It's scarce. There's only 21 million. There'll never be more, except for the fact that I can hold it on my phone, right? So it's right here. It's on my device right here, and I can take it with me anytime I want, right? So you could see a world where that makes sense for a lot of people. Now, people that are older might not get that, might not want that. They're not really as tech forward, right? Or internet native is what I would like to call. But if you talk to the younger population, them thinking about buying gold, they're like, that makes no sense to me. Why do I want to buy a rock? Right? They just can't really wrap their head around. But something about Bitcoin that's digital makes more sense because they're kind of digital first. So Bitcoin has, been around for since 2009. And I think it's close to a $3 trillion market cap. It sits at about $10,000 today US. So it's sort of made it. It's one of the biggest assets in the world. Okay. But all Bitcoin is you can think of it as a currency or as a store of value. That's it. I would say one thing that gets confused a lot, it's not going to be used as payments. It's not replacing the dollar by any means. Just like we don't pay for things in gold. It just doesn't make sense. Bitcoin's the same thing. We're not going to use it to buy things. It's a store of value. It's a place to put some wealth, just like gold is. So that's Bitcoin. Ethereum is a little bit different. It is similar in the fact that it is also becoming a store of value, but it is also being used a little bit more as a currency. But the thing to understand about Ethereum is that it is a platform. And you could think of it very much similar to Apple, right? Apple has the App Store where you create apps, you put it on top of Apple, and then Apple sort of powers it in its devices. Ethereum is the same thing. It is a blockchain, so it's those databases that live all around the world. But what people do is they put apps on top of it. Okay. And the reason they put apps on top of it is because they want to tap into that shared database that is all around the world. They want to tap into that capital that exists on there. So there's hundreds of billions of dollars already on Ethereum. ETH itself, so the asset, is worth, I think about 500 billion right now. But there is about $300 billion of assets that exist on top of Ethereum. Some of those are stablecoins, which we already talked about. Some of that is other crypto assets. Think of them like stocks or equities. And then some of it is stocks are actually coming on chain now. So Reidhead recently launched tokenized stocks. This is actually bringing stocks onto a blockchain. And so it basically secures all of those assets and all of those apps that exist on there. And so Ethereum is more of a tech play that also has an equity. So ETH is the token for it. So that's the equity, but it's also sort of a store of value as well because there's a certain amount of it. So it's you can't print more of it, just like you could a currency, right? So Bitcoin is a store of value. Ethereum you can think of as a store of value, but more of a tech platform. And the token for it would be equity is a good way to think about it. It is a bit different. It's not actually equity because to make a transaction on Ethereum, you have to spend a bit of ETH. So that's that fee, that transaction fee that I talked about. And so it's more thought of, it's called oil, right? If you think of the way the economy works globally, everything that you build, everything you do, you need oil to manufacture, to transport. And so that's kind of what ETH is thought of. It's obviously not oil. It's not a physical thing, but it's a nice sort of representation or way to try to understand it because everything you want to do, you want to launch a company on Ethereum, launch a protocol, launch an asset, trade an asset, you have to spend a little bit of that ETH. So it's you could think of it sort of like oil. But yeah, that can get confusing, but that's generally a way that people think about it.
Yeah, that's super interesting. So, okay, being the payments geek, I'm curious how how does a stablecoin sit on a blockchain? And then how are companies like a Visa, MasterCard, American Express, Stripe, or Walmart or Amazon, how are they going to, how could they, how will they, how are they using those to make their business better and the customers' lives better? Does that make sense?
Yeah, great. It does. It's a great question. And this is probably one of the biggest unlocks that I think is happening right now in sort of the tech world. You've seen Stripe is one of the biggest payment companies in the world. They just bought a stablecoin company called Bridge, and they are already integrating. So you can actually pay using stablecoins now when you use Stripe. But if we think about the payments world, it is dominated by the companies you just said, Visa, MasterCard, Stripe, and a few others, right? Especially when you get outside of the US. And this is basically the ability to move traditional money, so currencies, dollars, euros, whatever, move it from one person to another person. And Stripe, Visa, MasterCard, they basically just do it all in the background for you, right? All you do is tap a card. What's actually happening is money is moving from one jurisdiction to another jurisdiction. There's a bunch of fees associated with it. It feels instant to us. When I tap my Visa card, I can take my coffee and I can go away. But that actually takes about 3 or so days to settle. So the company, the merchant that sold you that, Starbucks, whatever, they actually don't get that money for a few days later. It takes a little while, okay? And the credit card companies and Stripe, they take about 3%, right? So it depends, but they take, I think it's 2.7% or whatever, plus 30 cents per transaction. And so there's a lot of places you go in the world where you actually can't buy something with a credit card that's like $1, right? Because the credit card companies are taking a big portion of that, right? They're taking 3%. So, okay, that's 3 cents, but they're also taking 30 cents per transaction. So they're taking 33 cents out of $1. So a lot of like convenience stores, even in the US, this happens. They're like, yeah, we're not going to accept, you got to pay at least like $5 or $10, right? So that's a bit weird because we want to live in a world where if my money's all in my bank and it's all on a credit card, I don't really want to use cash anymore. Not a lot of people use that anymore. Why can't I buy something that's $1 if I want to, right? And the real reason is because the financial system and payment system is just old and it's slow and it's inefficient. And so what did the internet do for information? It made it very efficient. It made it fast and it made it cheap. That's what's happening here with payments. And so Stripe has recognized that. So is Visa. They're actually really big in the crypto space as well and building on blockchain. So what they want to start doing is for the average consumer, the user, we won't know. We won't even notice the difference. We're still just going to tap a card. But instead of using these old traditional finance rails where what Visa has to do is take that dollar you just spent and then they have to send it through one company to the next to get it to the merchant or one jurisdiction to the next. So Visa ends up paying a lot of fees for that. What they're doing is the moment that payment happens, it's swapped into a stablecoin. Now that stablecoin, because it's on a blockchain, can go anywhere in the world, right? So let's say, I don't know, I'm buying something on Amazon that's actually from Italy, right? It'll send that stablecoin over to Italy for free, and then it'll, convert it back into the Italian currency, right, to a euro. And now Visa has saved a ton of money on that transaction, and it happened instantly, right? Whereas otherwise, if they did it the old way, it's going to take 3 days and it's going to be very costly. And in some jurisdictions, it's not even possible. What these companies recognize is that this is a way more efficient and more profitable product for them in the background. Now, our hope, and we are already seeing this with Stripe, is that means cheaper fees for merchants. So right now, if you use stablecoins on Stripe, the merchants pay, I think, just a 1% fee instead of a 2.7% fee. Now, they couldn't do that on the old traditional finance rails because it's actually just so expensive for Visa, so they couldn't go cheaper. Of course, they have good margins. But what stablecoins allow them to do is really make their margins way better and then hopefully give some of that back to the merchants, which will allow us to have what's called like micropayments or much smaller payments where we can still do it online. We can do it with credit cards. And so I think it's going to really change the way that we think about payments, especially smaller ones. So one of the things that comes when you use stablecoins and you don't have all these fees that a lot of people haven't thought of is why are we paid every 2 weeks or every 1 month? It's because, from companies, it's because it's actually quite costly to manage payroll and to make these payments, especially again in other jurisdictions. So what companies want is, well, instead of paying you every day or every week, let's make it one time a month. And then I can save on the fees to send that money over. Things that are happening in the crypto space right now is actually streaming payments. So because there's none of these inefficiencies, you can pay someone every second. And it's just like, as long as I'm working, you're getting paid every second and there's no fee to do it, right? So you think about, which is like, again, what did the internet do for information? We're recording a podcast. We could stream this live on Twitter. That wasn't possible in the 90s or in the early 2000s. It is today because of technology. That's what's happening in the financial system. Now, I'm not saying we're going to go to a world of streaming payments, but you start to think of like what things could happen in that instance, right? You could start streaming payments for other things. If I don't know, live streaming some sort of session where I'm teaching about whatever, I could make sure that if you want to watch it, instead of making you pay $20 to watch my entire webinar, you just stream payments in. And if you want to leave at any point, you didn't have to pay me the full $20 because you left halfway through. So you only paid me 10. So there's a lot of like cool things, net new things that can come from this innovation. And I think that's what really excites me. And I think that's what excites the payments companies, Visa, MasterCard, Stripe. That's what they're already starting to work on.
Yeah, that's super fascinating. Okay. So another thing I'm curious about is, and I'll get off the payments thing after this, I promise.
That's okay.
How does the on-ramp, off-ramp work? Like, one of my concerns as a uneducated, admittedly, person in the crypto space is the onboarding, offboarding of going to 7-Eleven, buying a Coke Zero, and having that money end up, taken from my account and end up in 7-Elevens. Like, how does that part of it work? Is it easy?
So
Is there still some hurdles that need to be crossed in that regard?
There's definitely a lot of hurdles. And again, this is part of the regulation that we just had. That stablecoin bill is helping to figure this out. How can banks do this? Who's custodying this stuff? How's this all going to work? We've gotten a lot better than we were, let's say, 5 years ago when stablecoins, first came out. I guess it was more 6-7 years ago now. But there's still a lot of work to do. And again, this is what like the Stripes of the world are doing. They just they acquired Bridge for, I think it was $1 billion or $1.2 billion. Bridge is basically that. They are an on and off ramp for stablecoins. So that is a problem that they've realized, and they're like, okay, let's buy a company that's already working in this space. For consumers, it won't really matter because I'm still just going to pay with the dollars that are on my Visa card, right? I'm going to be lent out money from Visa. In the back end, they're going to use stablecoins. So it won't matter to the consumer. And the merchant, they won't get stablecoins. They'll also get $1 in their bank account. So for the people that it matters for, they won't even know. Though there will be options, I think. What Stripe has been building is an option to either, like for me, I hold a lot of my wealth in stablecoins because I can get yield on it, right? I don't have the benefit being in the US where I can put it in treasuries in my Schwab account or whatever. I'm Canadian, and so I can only get 2% on the Canadian dollar, right? And I don't want that. I want to hold the US dollar and I want to get yield on that. So I hold a lot of it in stablecoins. And so for me, I actually don't even want to use my money in my bank account. Sometimes I'd actually just like to use stablecoins. And so that is a part that is being built in. It's still a bit clunky. We're not fully there yet, but that is coming. Merchants are starting to want to accept in stablecoins as well, because again, it can be cheaper. There can be less fees. They can get it faster. So some places around the world, they want that. Also, if you think outside of the US, if I'm a company, I'm a convenience store and someone's, coming to buy a coffee, do I want that payment to be in a euro or in a rupee or in a peso, or would I like that to be in a US dollar, right? If I'm in Mexico, I want it to be a US dollar. And so that's something that's coming. Now, how do they then get that into their own currency so they can go and buy things, groceries, et cetera? There's a lot of exchanges. Banks are beginning to launch and become exchanges as well. So there are crypto exchanges like Coinbase and Kraken in the US. We're starting to see JP Morgan become a crypto exchange. So you can actually move your crypto, your stablecoins in there, and then get real dollars from that. So I think that's the big trend moving forward. They needed regulation, which came this year. So we're going to see all the banks start tapping into this, and many of them already are beginning to. So it's still going to be a few years probably until this really gets seamless for everyone. But it's coming, and I think it's coming pretty quick. There's a lot of capital being put behind building this infrastructure.
Wow. Hard not to get excited about it. What for people who are curious about like adopting this stuff, checking it out, kind of dipping their toes, what type of person do you think it's good for to do this, and what type of person do you think it's not good for?
Great question. I would say it's good for everyone. Like, I really think everyone should be learning this. It's kind of like in the early 2000s, if you're like, okay, who should try out the internet, right? Of course, not everyone was going to try it out, but eventually it was like, okay, you all needed to understand this. And so I really think everyone should. If if you're an entrepreneur and you have a company, you absolutely should try to understand stablecoins because it's going to be something integral to your company. And it's a way that you can save a lot of fees. Just an example here is we pay about 35 to 40% of our employees in stablecoins, and we save a heck of a lot of fees as a result of that. And our employees end up saving a lot of money as well. So they absolutely love it. So it's a great benefit to our employees to do that. So I think entrepreneurs absolutely should be all over this, as you should any new technology, because it's kind of the way that the world is going. But I think in our community, so Milk Road is a media company where we basically educate about crypto, and we have a community where people can share ideas, whether it's investing or using this stuff. We've got people that are in their 60s and their 70s that are playing around with this stuff, and they don't have to, right? Like probably, I don't know if they'll ever need to use it, but they like it and it's cool to understand. And so I think if you're young, you absolutely have to be doing this because this is, again, the way the world's going. So you want to get ahead of it. It's like if you were early to use the internet and create content on social media, you probably did pretty well in life. If you're early today using AI, you're becoming a superhuman and you can do so much more. And so I think the same thing is true with crypto, especially if you want to really own and manage your own finances. A lot of people kind of just give it to a financial advisor, which is fine. I'm not advising you not to do that. But when you really think about it, there's a lot of fees that are associated with that and probably a lot of gains that are left on the table. Whereas if you manage your own finances, then you can try to find and kind of be on the edge here, and you can find ways to save a lot of money, right? And so I think, again, I'm not saying put all of your money in there by any means, but start small, play around with it, and start to learn what matters for you, right? Again, there's so many different use cases within crypto now that there's different pieces for different people. And so, you can go in and kind of explore and see what makes sense for you in your life, right? Do you need a loan? If you do, and you can't get one at a bank, you can go get one on chain, right? Do you need access to dollars or euros? Because there's also stable coins for euros. It's not just dollars. Do you have family that lives abroad that you send money to? Well, check out the fees, and maybe there's a better solution here in the crypto space. Do you store value somewhere? Are you looking for somewhere to invest money? Maybe you should look into Bitcoin. That's been a very good play for a lot of people, right? Maybe you can diversify outside of gold or stocks into that. So there's a lot of different things that you can do, and that might make sense depending on what you do in your life.
Yeah, totally makes sense. So where can people check out Milk Road? And please tell us what you got going on there.
Yeah, sure. So you go to milkroad.com. That's the best way to find us. And we've got newsletters in the crypto space. We've got newsletters in the macro world. We're launching one soon in the AI world. And really the goal of this all is to help you understand where the space is going, both of these spaces, but also understand how to capitalize, how to invest in it, how to basically have financial what is the word I want to use here? But security and take responsibility for your own finances is what we like to teach there. So we have newsletters and podcasts. So milkroad.com is the best spot. Where we're most active would be Twitter. So Milk Road Daily is the Twitter account there. And you can also follow me on Twitter. I'm pretty active there. And it's just Kyle Reidhead. So my name.
Awesome. We will make sure to put all that stuff in the show notes so people can easily find all that. Kyle, this has been an education. I have learned a lot, and it's been incredibly fascinating. I am going to start reading more about this stuff. So I appreciate you sharing your knowledge with us and with our listeners today. I know everybody got a little smarter.
Well, thanks for having me on. I'm glad to hear that maybe I'm converting you a little bit over to the dark side, as some people will call it. But I think it used to be, we had a bad few years, which always happens with new technologies. And I think we're coming out on the other side much better. And so I don't think we call it the dark side so much anymore.
Yeah, well, stable coins will probably be the gateway drug for me to get into this stuff. So, so to speak.
Exactly.
So, with the whole payment scheme thing, I promised I wouldn't talk about it anymore. Sorry, I slipped. All right. Well, with that, we will go ahead and sign us off. You guys go out there and invest with a margin of safety. Emphasis on the safety. Have a great week, and we'll talk to you all next week.